Gold is widely viewed as an inflation hedge, a reliable measure of protection against purchasing power risk. This doesn't stop others from contesting it. One of the candidates to replace gold, they say, is U.S. Treasury bills. They think that since it's supported by the government, it's a much more secure investment than gold. Well, let's compare this scenario. The Treasury is slow and steady. Gold is better held long term. It is worse if you if you have gold when it's peaking and when it's down. This limits the upside. The Treasury is slow but steady. They provide less excitement from reliable income. The biggest draw in buying Treasury bonds instead of gold is that Treasury locks in certain returns on investment. Investors who saw fit to buy a $10,000 30-year Treasury bond in 1982 would have pocketed $40,000 when the notes reached maturity with a fixed 10.45% coupon rate. Of course, the days of double-digit percent coupons are long gone, and that's the biggest problem. You'll be lucky to find anything close to 2%. And with inflation at 6%, which is what the government reported, you're actually losing money and not gaining any. Still, the government does offer Treasury inflation protected securities, or TIPs. It's a simple and effective way to eliminate risk, inflation risk, while providing a real rate of return guaranteed by the US government. As inflation rises, TIPS adjust in price to maintain their real value. One drawback is that TIPS usually pay lower interest rates than any other government or corporate securities, so they're not necessarily optimal for income investors. Their advantage is mainly inflation protection, but if inflation is minimal or non-existent, their utility decreases. Another risk associated with TIPS is that they can create taxable events with semi-annual coupon is paid. The bottom line, the Treasury offers too low an interest rate, but it's safe, they say. Given this information, determine which one is better for your goal. Are you cashing out in 2 years? Talk to a financial advisor and they can give you some ideas on Treasury bonds. Do you have years ahead of you before retiring? Then maybe physical gold is better, because in the long term with inflation, gold will continue to rise. If you want to learn about this in more detail, or if you have questions, give us a call, 877-646-5347 for a no pressure conversation. If you're interested in investing in precious metals and you want to talk to a no hassle representative that has experience in physical metal, give us a call. Phone number is 877-646-5347. Our phone lines are always open and we're happy to answer any of your questions.